thank you very much, thank you everybody for being here, especially those of you that were not here this morning. For those that were not here this morning, I'm going to do a very brief introduction about myself. I've been more than 30 years involved in introducing or helping introduce financial innovation in the market. And I have several roles or several capacities, but today I'm going to speak with two different hats. I'm going to speak initially representing TPPs as the Vice Chair of the ETPPA, which is a trade association representing TPPs in Europe. And then I'm going to swap hats. I'm going to speak as a co-chair of the SEPA API working group, and which is now transformed into SPA MSG group. And you will learn what that is if you're not familiar with it later on during the presentation. So let me start. As you can guess by the presentation title, I'm going to speak a little bit about the status of PSD2 and what alternatives are there to PSD2. And I realized when I was reviewing the presentation that I sent many spoilers to my own presentation early this morning. But before I do that, I have to speak a little bit about the prehistory, what happened before PSD2. Because many people believe that before PSD2 was drafted, this was what happened. There was absolutely nothing, a void. When actually that's not true. There were many things happening before PSD2. In 2001 in Spain, Bankinter, one of the most forward-looking banks, launched an account aggregation service emulating what Yodlee was doing in the US. A few years later, a couple of years later, Microsoft launched an account aggregation service based on Microsoft Excel for SMBs, and a subsidiary of Telefonica also launched an account aggregation service for investors. A few years later, again, BBVA launched a service called Tu Cuentas, a high-profile launch by the president and the CEO in what was portrayed by Forrester Research as this is what banking will look like in the future. And if the future is today, they were spot on, because what they did in 2008 is what everybody is doing today. But these are just a few examples. They're limited to Spain, which is where I come from. I have to acknowledge that Spain pioneered this in the EU, but there were many things happening elsewhere. So Ford pioneered payment initiation in Germany, followed by Trustly in Sweden, and there were things like FinTS happening also in Germany to gain access to financial information. So, before I go into why PSD2 might not be working as expected, let me tell a little bit about what the definition and objectives were. But let me start by saying that when the EU decided to regulate open banking, even though it's only in the realm of payments, and banking is much wider than payments, they were exploring uncharted territory. So it had never been done before anywhere in the world. So it is normal, as they say, you learn by doing, and this is exactly what we're doing in Europe. So PSD2 basically what wanted, the main political objectives were to foster innovation and competition in payment services across Europe for the benefit of European consumers, and balance with security. So it was not at any cost. So the innovation and the competition had to be able to respond to a strict and high level of security. And at the same time, it recognized legally two figures that existed before, as it was pointed out in the earlier part of the presentation, which basically were account information service providers and payment information service providers. So PSD2 gave them legal nature or legal status as supervised entities. Then, of course, these took time. There are many more things happening before 2016, but basically this is a short summary of when PSD2 entered into force in 2016 when the text was approved, or actually the day after the text was approved, until in 2019 it fully entered into force by the RTS, as it normally called Secure Customer Authentication and Secure Communication Regulatory Technical Standards. So since 2019, PSD2 has been working, so we have enough time to evaluate if it's working properly or not. And I think there's a general consensus that it's not delivering expectations. And the reasons for it are varied, and they're not unanimous. So if somebody else were here at stage today, they might be saying something different to what I'm going to say. But in a nutshell, I think there are three big issues. And I'm just speaking at title level, so I'm not going into low-level details. We could talk about many things, 90-day SCA, redirection, or mandatory redirection to be more precise, but I'm not going to go to that level of detail. I think there are basically three problems with PSD2. One is about the right incentives, or rather not having the right incentives for all the actors in the market. Two, there's an issue with the way innovation is trying to be forced into the market. And three, I think there's a relevant governance issue. So relative to the first one, so just imagine for a second that you go to business school, and I'm not sure I'm going to be able to read all of that in that screen. But this is your first day in business school, and you're launch an assignment, and you have to determine, so basically you're told that you have to share one of your most valuable assets with your competitors for free. So basically, you have four alternatives. One is you allow your competitors to access without restrictions your regular customer interfaces, knowing that if they do so, there's no way you're going to limit their access to data or functionalities. They are going to be able to access anything that the customer is able to access, and knowing as well that there may be some performance degradation if they are successful and they're accessing that interface too frequently. So that's one alternative. The other alternative is you build a top-notch, bulletproof API that's feature-rich, that's high-performing, that's highly reliable, because you want to make your competitors happy. The third alternative is you build an interface as a way to limit and control access to your information and functionalities from your competitors. And another alternative is that, actually, the last alternative is that you make an interface that is just good enough to fly under the radar of the supervisor in order to avoid fines. So minimum functionality, minimum performance, and minimum availability that gets you out of trouble. And I give you the option to choose C and D as well. So guess what's the right option? I'm going to tell you what's the options that PSD2 was built upon. It was built upon the options A and B. So it was supposed that banks would either allow TPPs to freely access the customer interface, or they would provide very good APIs to TPPs. And of course, none of that happened as we anticipated at the time of writing PSD2 and the RTS. So the correct answer, obviously, is D and E. It's rational. Sorry, it's E. It's C and D are the correct answers. So it's rational behavior from ASPSPs to limit access to their most valuable asset to their competitors in one way or another. And that's actually what happened. So, in a nutshell, banks did not have an incentive to do things well. They just had an incentive to comply with legislation, which they've been doing and they will be doing for a long time, and they do it very well. Second issue is about innovation. So, if I ask you a question, what do you think when you think about innovation? Do you think about this? This is what comes to your mind when I ask, think about innovation? Or would you rather think on something like this? I guess most of you thought of the second picture, and so do I, by the way. Or to ask it in another way, the same question in a different way. If I ask you, about the legislation that allows an ecosystem to thrive with innovation, in other words, that supports innovation, would you think in something like this? So a very thick piece of legislation with all sorts of directives and acts that tell you how you have to do things. Actually, there's a saying there, out there that says, EU invents, China copies, and EU regulates. Or would you rather think of something like this, a very thin book based on principles that allows the market to a large extent to sort things by itself. So it gives room for innovation and not for prescription. I guess most of you think this is the right answer. Actually, there are studies that show that innovation thrives in countries where legislation is minimal and is inhibited in countries where legislation is maximal. So this is science, it's not guesswork. And last issue is about governance. So I told you that the main political objectives, they're not the only objectives, but the main political objectives of PSD2 were to foster competition and innovation. And yet, the main governing entity of PSD2 is the EBA, or European Banking Authority. So if you go to the EBA website, in their homepage, you will find what you're seeing there. If you can find the words innovation and competition, I will give you a prize. So it's natural that the EBA makes a conservative interpretation of PSD2 because it's what's in line with their mandate, what they're obliged to do, but it's in contradiction with the political objectives of PSD2. So in the end, the interpretation that the EBA does of PSD2 via the RTS, via their opinions, via their Q&A tool, restricts innovation and restricts competition. And I'm not criticizing the EBA, this is natural behavior based on their mandate. But despite all this, things are happening. Quoting Galileo, eppur si muove. So things are happening, it's moving. So, and as an example, SEPA, and forgive me some, this is a picture with some text in Spanish. So instant payments are becoming the new normal. Actually, the European Commission, following March, will make a position relative to SEPA or instant payments, and maybe they will prescribe that banks will need to provide instant payments for free. And this is very relevant because instant payments completely eliminate the risk of execution. So if you're familiar with payment initiation services, one of the things that payment initiation service providers have to do is to mitigate risk, to make sure that when somebody pays with their account in a merchant, that they're not going to go back to their bank and cancel the transaction because that's a possibility. With instant payment, that's not a possibility, so PISPs no longer have to mitigate that risk, meaning that the cost of transactions for the merchant will be lower. So this is something very good and very relevant. Secondly, and these are just a few examples, there are much more things happening out there. Proximity technologies are being standardized as we speak. So in a short time, there will be a standard for all payment service providers to be able or to allow a payment user to show a QR code in a terminal, in a point-of-sale terminal to do a payment from their account instead of using a credit card. And the combination of this with instant payments, it's a game changer. And lastly, of the three examples that I wanted to bring here, there are out there, and they're already in working state. The EPC runs a scheme for IBAN proxies called SPL that allow you to pay to a mobile number instead of an IBAN account. So basically, it's a proxy that converts an IBAN account to either a mobile phone number or an email account, and so you can pay to that email or mobile number instead of having to type a complete IBAN, which is something not very easy to memorize. So combination of all these three are extremely relevant for the market. So in a nutshell, things are happening, and for certain actors in the payment industry, time is running out. So we have to move, we have to do something. So if PSD2 is not working as we expected, should we just wait for PSD3, for RTS2? Should we just rely on others, or should we try to do something? So basically, there's an alternative out there to the way things are working in PSD2, and it's not in competition or in confrontation with PSD2, as you will see in a minute. So it's basically an industry-led approach to open banking instead of a regulatory approach to open banking. So what we're trying to do here is, if you can, I'm not sure if the picture is clear enough, but what you can see here is a symphony orchestra and some rock players. So basically what we're trying to achieve here is that people from all kinds of places can play in the same concert, so to speak. And this is one analogy. We could have come with completely different ones. So, and this is a concrete project with a concrete timeline, and with very good news from yesterday and today, which I will tell you in a few minutes. So basically, in January 2019, the ERPB, which is the European Retail Payments Board, which is a high-level strategic board about retail payments in Europe, with a balanced representation of the supply and the demand side of payments in Europe, decided to launch a working group to explore the possibility of using PSD2 as a baseline and the sky as the limit, and using a scheme-based approach to leverage or to get the maximum out of PSD2 and build on top of it. That group, which I had the honor to co-chair with my friend Christian Schaefer, delivered this report in June, which was acknowledged in June 2019. It was acknowledged and welcomed by the ERPB, but unfortunately, if you recall from my earlier part of the presentation, and maybe some of you suffered in your own flesh, summer 2019, it was a nightmare implementing PSD2, so it was not the right time to focus on something different. So before thinking about dinner, I want to have my breakfast sorted out, which is what we were doing. So we decided to put the project in standby mode. In July 2020, so summer before last, the ERPB launched an informal working group to explore if the conditions were met to relaunch the project, and we quickly reached a positive conclusion. So in November 2020, based on that, the ERPB decided to launch phase 2 of the project, which delivered a project in June 2021, which was fully approved by the ERPB, including its recommended way forward, which basically had 2 recommendations. One was to implement the payment asset class and invite the EPC to do so. And 2, to find the appropriate host to continue exploratory work for payment asset classes beyond payments, for finance asset classes beyond payments, and to frame the ecosystem for asset classes beyond finance. So I'm using concrete terminology from the working group. I might be a bit confusing. So basically, tell the EPC to launch a scheme for payments based on PSD2, but building on top of it for things that are currently not included in PSD2, and for a price. And 2, find a place to investigate the development of this beyond payments, because neither the ERPB nor the EPC have a mandate beyond payments. And we didn't want to lose the momentum that we had achieved in this working group. So this for the timeline. So what problem are we trying to solve? Basically, we have a 2-sided market. In one side of the market, what you see in the top of the screen there is you have guys and girls that have assets that they own. They can be either information or transactions, which are held for them by asset holders. So in the context of payments, these guys and girls would be payment service users, and those asset holders would be ASPSPs or banks, typically. They could be payment institutions as well, but typically banks. But we made generic terminology so that this could be easily expanded to other asset classes beyond payments. And these asset holders are holding significant value owned by the asset owners that could be unlocked if it could be freely shared with other type of entities, which we call here asset brokers, which in the world of PSD2 would be TPPs. So if that value is unlocked, then we can create a thriving ecosystem for payments and beyond. So there are many ways to solve this problem. The first alternative is PSD2, so a regulatory-based approach, tell the market what they have to do. And I've already gone about the issues that this approach faces. But there's an additional one here that I didn't mention, that you have the N-1 problem. So you have 7,000 asset holders in Europe that have to connect with hundreds of asset brokers in Europe. And you do the math, but I think it's millions of connections. So that is highly inefficient. So if you want to be a leading TPP in Europe, you have to throw like 7,000 connections, and every time you have an incident, an API is not working or whatever, you have to know what the contact point in that particular of 7,000 asset holders is and try to sort the problem out. So this doesn't work well. An alternative or a second alternative could be, well, forget regulation, let the market sort it out by themselves. Just don't do anything, the market will sort it out. And I'm all in for a free market, but a free market, as I learned during my economic studies, has issues, and one of them are monopolies. And in the digital world, there are massive economies of scale that create monopolistic forces and tend to create a winner-takes-all kind of game. So we don't want a Google or an Amazon, so to speak, to dominate this in Europe, even if it's a completely different player. I'm not taking anything from Google or Amazon. It's just an example. Because in the end, monopolies tend to raise prices and tend to working against the interests of the consumers. So this is not a good alternative. So the third alternative, and this is a random chart so don't read all that, please. This is a random chart from a SEPA API presentation. Basically, is to sort this out through a scheme-based approach. So basically, asset holders and asset brokers agree to create a scheme which has operational rules, admission rules, governance, risk management, pricing management, whatnot. And you only have to make one contract with a scheme to connect to all the 7,000 asset holders in Europe. So you're reducing the complexity to one connection from N-1 with a very large number of Ns. And you are creating a model which allows for a fair distribution of value and risk. So this eliminates problem number one, which is that the asset holders don't have an incentive to do things well. In this case, asset holders would get a price for basic services, and they would get an additional price on top of that one for premium services. So if I am a TPP, which I am, and I connect to the scheme, which I intend to do, I will pay banks for what I'm now getting for free through a PSD2 and API, but I know that it has to work because the scheme is going to be vigilant that the bank complies with the scheme requirements, and if I have an issue, I have a way to resolving that issue through the scheme and not with a particular bank. Okay, so there's an incentive to do things well for everybody here, and I think any TPP in Europe worth its salt would be willing to pay to get a higher quality service. Of course, it says fair distribution of value and risk, so it has to be a fair price but for both sides of the market. So what we did here is we followed an approach in which we studied, and there were not just banks and TPPs studying this. This was led by people from the commerce side, so people that know the job. what sort of customer journeys would we want to cover? Best of class customer experiences that we want to of course, linked to payment services that we want to solve. And very smart people worked on this for many months, and we came with a prioritized list of customer journeys, top of class, as I said, and associated to these customer journeys were a number of business requirements, some of which already exist and don't have to be built, and some of which are new and will need to be created. So with this, SEPA API Access Scheme is built with the mission to make PSD2 work. So we're building on top of PSD2, and we're trying to make PSD2 work as well as possible, but also to build on top of it. So PSD2 is just the baseline from which asset holders can create premium services that will be fairly valued by TPPs. And the vision, in my opinion, the vision is only translating to the future the mission in case you succeed. The vision is that Europe will have finally succeeded in the transition to an API economy where services have been fully digitized, and we're leading the way in an open data economy and society. So this sounds like corporate mumbo jumbo, and sometimes missions and visions sound like empty words. So we created this chart to show what the vision means. So in the left, you have Lego bricks are portrayed here to show, to an extent, what an API economy looks like. So you have little pieces of functionality that are accessible via an API to all parties in an ecosystem. So in the left, you have an analog value chain, which would be a credit concession. So typically, in the analog world, you would go to the branch. You would be requested to give some papers, your payroll, your tax declaration, your social security papers, and whatnot. You would apply for the credit, and would be asked to come back in a few days or weeks to learn if the credit had been approved or not. And then when that happens, you sign in paper and you get the money in your account. Basically, when we talk about digitized value chains, which is to a large extent where we are now, what we have done is made the analog value chain electronic, but we haven't changed anything. So basically, instead of going to your branch, you go to your web browser, you fill in a form, you provide all the PDFs for all the information that you requested, you submit that, and then maybe online if the bank or the lender is very efficient, you will learn the result of the application, and then perhaps electronically you would sign that application. But basically you're doing the same, you've only gained efficiency. A lot of efficiency, by the way, but it's only efficiency. You haven't changed anything significantly. And in a 100% digital world, which is what we envisage, you will no longer ask for a credit because you don't care about credits. You care about what you're financing with the credit. So in this case, you're buying a service, which is a car, the financing, the insurance, and everything required to make the car yours and to be able to drive it safely. So basically, you would go to a car dealer, you would choose the car that you like, which is what you really care about. You don't care about the financing, you don't care about the insurance, you don't care about the registration plate. You would fill some stuff perhaps in a tablet, and you would enter your banking credentials, and in a few minutes, you might be driving your car away from the car dealer with its registration plate, with its insurance, with everything in place. And this is it's not a very creative example. You do have things close to this, not as fast as I described it, but close to this in some places today. So I think there's a huge reward for people that are able to visualize. You need to be creative for this, to visualize what can you build with bricks that will be available shortly that is completely new, that is not just translating digitally what already existed in the analog world. So basically, in other words, this is the tip of the iceberg. So, increasing the timeline, I left it in June. In November 21, yesterday, the EPC approved, there was a long discussion, and the EPC board, of which I'm part of, yesterday approved the invitation by the ERPB to develop the scheme. So this is excellent news. And at the same time, we have established a very good relationship with a part of the European Commission in DG FISMA, the financial data space expert group, and we're trying to transfer the non-payment part to that group to lead it and take it forward. So if everything goes well, and I'm sure it will, in 2022, there's a more detailed work plan that will be published in the EPC website pretty soon. In 2022, we will have a rule book written and ready to be launched, and in 2023, the scheme will be live. So, to end my presentation, if we succeed, we will end with a very thin book of legislation. We will avoid the Commission a lot of work in open finance, and we would have sorted as an industry a very big problem, not only for ourselves, but also for the legislator. And if we don't, we'll have a very thick piece of legislation. Whatever directive or act would be imposed upon us, and we would have to spend a lot of money implementing whatever the Commission tells us. So that's what I had to share with you today. I hope it was interesting. And I don't know if we have time for questions and answers. If not, I will be available at LinkedIn. My email is there. I don't know if the presentation is going to be distributed. I welcome questions from any part of the world. Thank you very much.